Auckland mortgage payments have surged 8.7% in just 1 year. Average weekly mortgage outgoings jumped from $605 in 2023 to $658 in 2024. But here's what makes this particularly brutal: nearly 1 in 7 Auckland homeowners are now spending 40% or more of their income just on housing costs. That's the threshold where economists say you're in mortgage stress. And if you're in that situation right now, or you're watching your mates struggle with repayments that seemed manageable 18 months ago, you need to understand exactly what's happened here. Because this isn't just about interest rates going up. It's about 3 converging forces that have turned Auckland homeownership from an achievable goal into a financial tightrope that thousands of Kiwi families are now walking every single month. Between 2020 and late 2021, when the Reserve Bank had the official cash rate sitting near zero, mortgage rates were as low as 2.5%. Families budgeted around those rates. They factored in childcare, school fees, groceries, petrol, everything based on those low repayments. And then the RBNZ raised the OCR from 0.25% to 5.5% in less than 2 years. Here's the maths on what that actually meant. If you took out an $800,000 mortgage in 2021 at 2.5%, your monthly repayment was roughly $3,200. By late 2023, when rates hit 6%, that same mortgage was costing you around $5,100 a month. That's an extra $1,900 a month, nearly $23,000 a year straight out of household budgets that were already stretched. And look, Auckland families weren't budgeting for an extra $23,000 in annual mortgage costs. They were budgeting for what they signed up for. But now, nearly 15% of Auckland homeowners are in that mortgage stress zone. And for many of them, there's no easy way out. So we're breaking down exactly what's happening with Auckland mortgage payments, why this burden has exploded so dramatically, and most importantly, what it means for your financial situation and where this market is heading next. Right. So before we get into the numbers, let me tell you where this data comes from. Everything you're about to hear is sourced from Stats NZ, the Reserve Bank of New Zealand, ANZ Bank's economic research, and Infometrics. These are official statistics, not speculation. Here's what we're covering today. First, we'll look at exactly how mortgage payment burdens have changed from 2019 through to early 2026. Then we'll break down what happened when the RBNZ went on that aggressive rate hiking cycle. And finally, we'll talk about what this means for Auckland homeowners right now and what the outlook looks like for the next 12 to 18 months. Let's dive in. So here's where we stand. According to Stats NZ data from the year ending June 2024, about 19.7% of all New Zealand households spent 40% or more of their income on housing costs. That's up from 18.2% the previous year. But when you break it down by who's actually carrying mortgages versus who's renting, the picture gets clearer. Nearly 15% of homeowners, that's roughly 1 in 7, spent 40% or more of their income on housing in 2024. And remember, 40% is that critical threshold. Once you cross it, you're officially in mortgage stress territory. Now here's what's really concerning. The share of homeowners who said their income was not enough or only just enough to meet everyday needs rose from 31.5% in 2023 to 34.4% in 2024. Think about that. Over a third of Auckland homeowners are saying their income barely covers their needs, and a big chunk of that is mortgage repayments, eating up more and more of their weekly budget. Let me give you the actual dollar figures. Average weekly mortgage payments across New Zealand climbed from $605 in 2023 to $658 in 2024. That's an 8.7% increase in a single year. And that $53 extra per week might not sound massive, but multiply that out, it's an extra $2,756 a year. For households already running tight budgets, that's groceries, that's power bills, that's school costs. But the real story isn't just the weekly increase. It's what happened to the overall cost burden relative to income. Stats NZ data shows that households spent $22.20 on housing per $100 of income in 2024, up from $20.80 in 2019. So housing costs are taking up a bigger slice of the income pie than they were 5 years ago. And here's the kicker: incomes only rose about 5.5% in the year to June 2024, but rent and mortgage costs rose roughly 9%. So income growth got completely outpaced by housing cost growth, which is why so many families feel the squeeze. Now let's talk about what actually caused this explosion in mortgage payments. And the answer is pretty straightforward: the Reserve Bank of New Zealand's interest rate hiking cycle. The RBNZ raised the official cash rate from 0.25% in early 2021 to 5.5% by mid-2023. That's one of the most aggressive hiking cycles in New Zealand's modern history. They held it at 5.5% from September 2023 all the way through to July 2024, nearly a full year at peak rates. Now, mortgage rates don't move in lockstep with the OCR, but they track pretty closely. When the OCR was near zero during the pandemic, you could get fixed mortgage rates as low as 2.5%. By late 2023, those same mortgages were being offered at 6% or higher. So, let me walk you through what this meant for Auckland families. Let's say you bought a house in Auckland in early 2022 for $1.1 million, which was around the median at the time. You put down a 20% deposit, so you borrowed $880,000. If you locked in a 2-year fixed rate at 2.8%, your monthly repayment was roughly $3,500. Fast forward to 2024, when that fixed term expires, your rate resets to 6.5%. Your new monthly payment? Around $5,600. That's an extra $2,100 a month, or $25,200 a year. For a household earning Auckland's median combined income, let's say around $110,000 to $120,000, after tax, you're probably taking home around $85,000 to $90,000. So that mortgage payment alone is now consuming well over 60% of your take-home pay. And here's the thing, refinancing doesn't necessarily help. Banks tightened their lending criteria as rates rose and as mortgage stress increased. So the same family that qualified for $880,000 in 2022 might now only qualify for $650,000 or $700,000 based on current serviceability tests. ANZ's chief economist Sharon Zollner noted that even after house prices fell from their 2021 peak, prices, compared to incomes, are still higher than any time prior to 2020. So you've got falling equity, rising repayments, and no easy refinancing path. Families are trapped. Right, so let's zoom out and look at the bigger affordability picture, because mortgage repayments are only part of the story. According to the data, New Zealand housing costs are about 6 times average household income. Demographia's 2024 survey still ranks Auckland as severely unaffordable, even after prices came down from their 2021 peak. ANZ economist Sharon Zollner put it bluntly, prices are still very expensive relative to incomes and rents. Mortgage repayments as a percentage of household income only dropped from around 50% to just over 35%. So yes, affordability improved, but not nearly as much as you'd think given how far prices fell, because interest rates went up so dramatically that they cancelled out a lot of the benefit from lower house prices. Let me give you a concrete example. In 2021, the median Auckland house was about $1.3 million. At a 2.5% interest rate, a family borrowing $1 million would pay roughly $4,000 a month. By 2024, the median dropped to $990,000. But at a 6% interest rate, borrowing $800,000 costs you about $5,100 a month. So even though house prices fell 20% to 22% from the peak, monthly mortgage costs actually went up for anyone who bought recently or refinanced. That's the affordability paradox right there. And it's hitting low-income households particularly hard. Roughly 1/3 of those in the lowest income quintile, 31.7%, spent over 40% of their income on housing in 2024. These aren't wealthy investors. These are teachers, nurses, tradespeople who bought modest homes in outer Auckland suburbs. Infometrics economist Gareth Kiernan pointed out that first-time buyers are taking on much larger loans than in the past, even if servicing costs have come down slightly. So the volume of debt is higher, which means any future rate increases or income shocks could be devastating. All right, so what does all this actually mean if you're an Auckland homeowner sitting in mortgage stress right now, or if you're watching your repayments eat up more and more of your budget? First, understand that you're not alone. Nearly 15% of homeowners are in the same boat, spending 40% or more of their income on housing. And over 1/3 of homeowners say their income is barely enough to cover everyday needs. This is a widespread issue, not an individual failure. Second, the interest rate outlook is improving. The RBNZ cut the OCR from 5.5% down to 2.25% as of November 2025. That's a 325 basis point cut from the peak. Mortgage rates have started to follow. The average mortgage yield was 5.4% as of November 2025, and it's expected to fall to around 4.7% by September. So if you're coming up for refinancing in 2026, you'll likely see lower rates than what you're paying now. That will provide some relief, but it won't erase the damage from the past 3 years. Third, If you're in genuine mortgage stress, meaning you're struggling to make repayments, talk to your bank sooner rather than later. Banks have hardship provisions. They'd rather work out a repayment plan than foreclose. Some families are extending loan terms to 35 or even 40 years to reduce monthly payments. It means paying more interest over the life of the loan, but it can keep you in your home. And look, some families are making the tough decision to sell. If you bought at the 2021 peak and you're underwater on your mortgage, selling might mean accepting a loss. But if you can't afford the repayment and you can't refinance, sometimes cutting your losses is the least bad option. For those thinking about buying, here's the reality. First home buyers made up about 28% to 29% of Auckland purchases in late 2025. Conditions have actually improved for first-timers because prices are down and there's less competition from investors. CoreLogic's Kelvin Davidson noted that conditions have been in their favor. But don't mistake lower prices for affordability. Even at $990,000 median, you need a $200,000 deposit for a 20% down payment. And you need to be able to service a mortgage of $800,000 at current rates. Run the numbers carefully. Factor in not just the repayment, but insurance, rates, maintenance, everything. The long-term picture is uncertain. The RBNZ forecasts only about 3.8% capital gain on house prices in 2026. So if you're buying for shelter, not for short-term capital growth. The days of relying on 7% annual returns from Auckland property are over, at least for now. Let me bring this all together. Auckland mortgage payments have surged, with average weekly outgoings climbing from $605 to $658, an 8.7% increase in just 1 year. Nearly 1 in 7 Auckland homeowners now spend 40% or more of their income on housing, which is the official mortgage stress threshold. This crisis was driven by the RBNZ's aggressive interest rate hiking cycle from 0.25% to 5.5% in less than 2 years. Families who locked in low rates in 2021 saw their repayments jump by $2,000 plus per month when those fixed terms expired. If you found this breakdown useful, hit that like button and subscribe to Kiwi Property Reports. We're tracking New Zealand's housing market with verified data and real analysis, no hype, just the facts you need to make informed decisions. Drop a comment below. How are rising mortgage payments affecting your household? Thanks for watching. I'll see you in the next report.